To you this Friday morning. It's another amazing opportunity to be here on Finance Friday. My name is Ayodele-Bamisaiye of Dexteritas Professional Corporation, and I'm excited at the opportunity to be able to speak to you this morning about all things personal finance, taxes, enterprise, and long-term financial planning. Um, it's been a good week. Definitely been a good week for me, irrespective of how much snow we've had, or how squishy the roads are, or how bad the traffic has been, or how much construction is going on in the city of Calgary. It's still another amazing Friday morning. And today, I'm going to be talking about the things that we can still do. Because guess what? The window to take any action with regards to your taxes is closing real quick. And that window, for most things, is going to slam shut by the 31st of December 2025. However, we still have a bunch of days, 26 days to get to that point. But before we go into the meat of the matter, I just want to bring to your attention, as always, that my friends at the Financial Empowerment Initiative are excited to be able to support anyone of modest income who has an outstanding tax return to get that tax return filed. And how does that work? Simply send an email to operations, that's the word operations with an S, at thefei.ca, and somebody will respond with an appointment saying, hey, show up at this place, whether in person or online, and we will have somebody there who's going to look at your tax return and have that filed with the CRA so that you can get access to the government benefits that are available to you as a result of your income. That's number one. Number two, yesterday was webinar number 4 of the Launchpad series by Startup Court. That was another exciting edition with David Daigle talking about what? Sales. Good old-fashioned sales. And he was talking about from the perspective of, somebody who has a responsibility to ensure that those transactions close, right? He took the time to talk about how marketing and advertising and public relations, all of them work together to the sale, and why it is necessary for you to have an after sales care situation, which will put you in a position to retain your clients and see them come back as a repeat. Because guess what? The money is not made when they buy once. The money is made when they buy over and over and over. You get the point. So yesterday was a good one. The recording and the slides should be on the community. That's community.startupcourt.com sometime in the course of today or sometime early next week for the video recording. Yes, it was recorded on Zoom. And if you'd like to see that, sign up, join the community. You have all the past webinar series online already. And next week, Tuesday, yours truly will be talking about financial management and compliance as far as new businesses and entrepreneurs are concerned. So same time at 6 p.m. Tuesday, the 9th of December, we're going to be talking financial management and compliance as webinar number 5 in our series, and I will be handling that session. I am looking forward to having that conversation with you. It promises to be an exciting time. So I think that's pretty much all I got as far as Startup Court is concerned, and I'm about to talk taxes. Yep, taxes. So what's up with it's just 26 days left. What exactly can you still do as far as your tax planning is concerned for 2025? I think these are all things that we've talked about in the past at some point, but I want to take the time and just go over them once again to ensure that we have it all locked and loaded. Don't forget, last week we spoke about audit proofing your finances from a CRA perspective. 5 types of documents you require: income documents, expense documents, bank statements and credit cards, investment information, and of course, contracts and agreements that you have signed, which have an income implication for you. Now, this week we're looking at what exactly can you still do? And that's where I'm going to focus my attention, right? This is effectively the last window that you have. If you don't take advantage of the opportunities you have, probably outside of the RRSPs, every other thing that you can do with regards to your personal tax return is already done by December 31. So you still have 26 more days to take action. And what are these things that you can take action on? Number one, if you have eligible business expenses that you can incur, i.e. professional services, i.e. advertising, i.e. training and education, equipment under $500 that are fully deductible, software and subscriptions, if there's any of those things that you know that, okay, you have the cash flow and you can pay for and they are valid business expenses, potentially you could capture those expenses before the end of the year, and that gives you the opportunity to take those write-offs as part of this calendar year. Please note, these have to be legitimate business expenses that you are going to incur anyways, right? That's number one. Number two, we are looking at income. So if you're a business owner, you have the ability to determine how much you get paid and exactly how you get paid. Now, you have the opportunity to choose whether you get paid a salary or you get paid a dividend. This is the time to say, okay, if I pay myself a salary, what does that look like? Versus if I pay myself a dividend. And being able to make the choice that's most suitable based on the facts of your situation is in your best interest. So at this time, you definitely should be asking yourself and asking your accountant to say, hey, am I taking a salary? Am I taking a dividend? Am I taking a combination of both? How much am I going to be taking in each of these areas if I am taking a combination of both? It's critical that you do that math at this time so that you have the opportunity to make any adjustments necessary before the 31st of December. Take note, if you're paying bonuses to your staff, there is a timing. You need to make sure that those bonuses are paid within I think it's the first 90 days or first 90 days of the calendar of the new year for them to count as valid expenses within this year that's ending on December 31. So you need to keep that in mind as well. What's the third thing I want to talk about? Charitable givings. Hello, the super credit. Charitable givings for 2025 income will end December 31, 2025. So if you plan to give to a charity and you want it to have an impact on your 2025 tax returns, then you need to make that donation before December 31, 2025, 11:59 p.m. You have to make that donation. Whether that donation is going to be in cash or in stocks or in any other form, it needs to be made before the December 31. That's the only way that's going to count towards your tax returns for 2025. So, charitable donations, take a look at it. How much are you giving away to what cause, right? And what's the implication for your taxes? You need to do that math. It's important for you. Fourth thing I want to talk about is if you have assets either on the stock market or some other kind of assets that could trigger capital gains and losses, or you have triggered capital gains and losses in the past. Take a look at those to say, okay, what is the impact on you right now? Are you going to be able to, trigger some losses now to defer gains that you've enjoyed earlier on in the year, thus helping you to better manage your tax bill, right? So those are some of the things that you want to consider. You want to ask yourself that question and make sure that you have a firmer grasp on what the answer is so that you are making the right decision for yourself. Now, one last thing, when it comes to installments on tax payments, you are asking yourself, have I paid enough in taxes based on my income to avoid an installment penalty, right? So if you find yourself in a situation where you'll be owing more than $3,000 in taxes by December 31, then you definitely want to be making an installment payment. Now, the CRA is going to say, okay, if you owe us $12,000 at the end of the year, you should have been paying us at least $1,000 on a monthly basis to have paid up the taxes by the end of the year. Now, if you have not done that, you expose yourself to the likelihood of interest and penalties arising from non-payment or non-timely payment of installments on taxes. You don't want to be in that situation. So take a look at your situation, probably reach out to your accountant and say, hey, I've made X, I spent Y, here's how much net income I have. This is what my tax bill was last year, and I was supposed to pay installments based on that. Is that aligned? Should I be making the installment payments, or should I not bother at all? That conversation, having it, is to your benefit, and it's in your interest to do that. So these are the 5 things that we definitely need to take a look at and think through. So what are they? Once again, first things first, what are the expenses that you potentially could incur that will help you to manage your tax bill? Number 2, taking income. Should you be taking a salary or a dividend? Number 3, charitable giving. How much are you giving away? To what cause? Make sure you have the capacity to get that done before December 31, 2025. Capital gains and losses that have been triggered as a result of sale of assets, whether the assets are stocks, bonds, real estate, as the case may be. How is that affecting your tax bill? And definitely, lastly but not the least, installment payments. If you are certain that you are profitable and you have taxes due in your business, and you are going to be owing more than $3,000 at the end of the year, the expectation is that you would have made installment payments in the course of the year. So making an installment payment right now is in your interest. So do so. With that said, that's pretty much all I got for you this Friday morning. We've been talking financial clarity for the last 10 weeks. Next week is the last of those sessions, and definitely will be my last Finance Friday for 2025. And at that point, we're just going to go through all the key lessons that we've picked up in the course of the year, as well as look at things for 2026. There is opportunity to manage that tax bill. And I can say to you, like I've always said in the past, your tax bill is your largest single expense that you will deal with for the entirety of your life as a resident of North America, particularly Canada. So, what do you want to do about it? My counsel is don't sleep on it. Take a look at it. Make sure that you have those ducks in a row. And if you are saying, hey, doctor, I really don't get what you're talking about. I don't know what all this stuff means. Then hit me up. Talk to me.dexterity.ca. Let's have a conversation about this. See how we can set up a plan and put you in a position to be able to say boldly that I understand why I'm paying what I'm paying in taxes, and I have set myself up to have every advantage that is possible for me. That's all I got for you this Friday morning. It's another beautiful day. Make sure you have a fabulous day. Enjoy the weekend ahead. Because guess what? The holiday season is here and there's lots of good cheer. Attend the parties. Be kind to people. Have a beautiful Friday morning. Take care and bye for now.